How's it going, investors? And welcome back to my channel. Happy New Year, by the way. Happy 2021. I wish you all a profitable year with big returns, and we hopefully together we will manage to get higher returns this year than ever before. Today we're going to talk about my dashboard, the one that you're currently seeing here, and my portfolio performance against the S&P 500. I built this dashboard during the last weeks, and it's a quick look on how my portfolio is performing, considering different categories, and how much dividend I get paid or I got paid during the last month. It's nothing really special, nothing that broker wouldn't currently give you. Like I imagine M1 Finance is one of the best in this sense in the US, but somehow this way you can structure what is more important for you in one simple dashboard that gives you a quick look, which is of course also automated in terms of current performance and dividend paid. So let's start. Let's get to it, and let's start first of all with the most important visible thing of this dashboard, which is my performance. So here you see like a graph of when I started my portfolio. So it's like date gets back to 1st of April, and it's a percentage performance return against the S&P 500. As you can see, I'm the orange curve, while the S&P 500 is on the blue curve. So performance-wise, we can first of all tell that I greatly underperformed the S&P 500. As you can see, my current performance portfolio as 31st of December stands at 19.5%, while the S&P 500 is at 33.6%. So I basically have half of the returns of the S&P 500. It's a bit though unfair to compare this with the S&P 500, because 1st of April was basically the beginning of the bull market after the Corona crash, and we saw that the S&P 500 has been driven a lot by tech stocks. And at the beginning, most of the stocks that were included in my portfolio were recovery stocks, and they are still recovery stocks, not tech stocks. And many of them still didn't recover. Like I can mention Realty Income or Store Capital or Coca-Cola. They are still way below their high of March. So I expect that this portfolio could get closer to the S&P 500 going into next year. The second thing to take into consideration is that from 1st of April till 31st of December, many people might argue that actually we saw a 40 or 45% return in the S&P 500, but it's 33 because this is a euro performance portfolio. So the S&P 500 has been converted in euro, and this shows you, for example, that since the beginning of November till now, the S&P 500 didn't move at all. It's just the dollar that got weaker against the euro, and this pushed the values of the stocks. So for many people that have seen a kind of a return, actually their purchasing power has been dropped compared to the euro. As like for 2 months, we have traded flat. So as we said this, so we have to consider this is euro. Of course, also my portfolio is converted in euro. I'm hoping that going into 2021, the recovery stocks will recover and give me kind of a melt up to get back to the S&P 500. The second graph that I like in this dashboard a lot is my three donut or kind of three circle graph, which contains three different kind of information. The bigger circle, the bigger ring, it's basically how my portfolio is divided, and we have, like as you can see, 57% in growth stocks and 43% in dividend stocks. So I like to split my stocks in these two categories. As you know, there are many categories in how you can split them, because I think that all of us should target their preferred, I would say, their preferred way of investing. So their preferred goals, um, level of risk, management. Um, for me, it's important to have both kind of categories. So growth stocks, stocks that appreciate in value a lot, and that might have also a dividend, and dividend stocks. So pure value companies, blue chip companies that have their growth plateaued, but they keep increasing their dividend because they're companies that they're not going anywhere, at least not anytime soon. So this is kind of the division that I would like. I know that you could say that growth stocks are actually basically, you can separate them in pure growth stock or value growth dividend stocks. And dividend stocks could be also value stocks or also growth dividend stocks. So I think the separation is very personal. In this case, I would like to say growth and dividend. Going into the second ring, this is basically what is my return to the last year, and I will keep this updated by splitting it also into years. So, for example, 2021 will have a new ring, but if we look at 2020, we have like 96% of my return was in capital gains. So growth stocks played a big role here, while 4% only was in dividend. And you can see here in this Instagram how much dividend I got paid last year per month, with November being the best month so far. This is not so important to consider. Like it's very nice to see that somehow your portfolio is growing. The return that you're getting, but it's not statistically very relevant. Like I could have more and more return, but it's not it's of course the main reason of why we're doing this, but it's not the main statistic to understand how your portfolio is performing. Like for example, this is much more indicative. The dividend that you're getting paid, if they're going up, is much more indicative. This is much more interesting to me. The third circle in the middle, it's basically on which currency I'm having my holdings. So 83% of my holdings are in USD, so are American companies, and only 17% of my holdings are in Euro. This doesn't mean that the companies that I hold in Euro are only Europeans. In fact, I have a Russian company called Gazprom, which is also in the Euro side. And there are many companies that are European that are in the Nasdaq, like Nestle, for example, that would be, for example, holding that case in USD. So I'm just saying that you can buy the same company in different stock exchanges and hold it in different currencies. And at the moment, I have much of my holding in USD, which I feel like it's a bit overextended, I would say. No, it's a bit not overextended. It's a bit over the top. I would like to cut this percentage to at least 60% and have 40% in euro, and maybe add pounds in the game as well. So this is for my portfolio allocation. Moving forward, we can go to the sector allocation, and here is pretty clear that I'm extremely eager to own tech stocks. Of course, this part of tech stocks was not 52% at the beginning. It grew a lot over the last months, and that's why at the moment I have over half of my holding in tech stocks. Then I have 5% in communication, 15% in consumers, 3% in energy, 3% in finance, 9% in healthcare, 4% in industrial, and 9% in real estate. I think that also this going to next year should be better allocated. So for example, I would like to keep my holdings of tech not over 40% and have a better spread between these other sectors, and maybe energy and finance will still be the lowers of my holdings, but definitely I will increase healthcare or industrial and real estate. So we already talked about this Instagram. This is basically the dividend that I got paid during the last month of 2020. Since I started in April, I was already lucky to get €1.80. Then it kept growing with a very big spike on November. None of my stocks had cut their dividend. Actually, many of them had increased their dividend. So looking into 2021, I feel quite fine, and some of them will get back the dividend. So I have holdings of Frankfurt Airport. When I bought the stock, the dividend was already suspended, but I believe that with the return of normality in 2021, 2022, more likely, this dividend will be reestablished, and this will add much more value, and the dividend paying will keep increasing. I will add in the future trend line of the dividend. At the moment I don't have it because I don't have still enough information, but I will include this in the future videos. And last but not least, we have the current annual income. So the current stocks, how much they pay, the current dividend stock and how much they pay me, with the biggest annual income given from AT&T. Then we have AbbVie at 65.55. We have then royalty income, Store Capital, PST. It's Poste Italiane. It's basically like I wouldn't say like a bank, but it's like the post office in Italy. So the equivalent of the UPS in the US, or the Deutsche Post in Germany. Then we have Intel and Gazprom. Unilever, which is a big consumer company, is part of the 10 sisters that holds many products that you buy every day, like Ben and Jerry's. Then we have ADP, Coca-Cola, Johnson & Johnson, Lowe, Microsoft, and as we said, in the future, Frankfurt Airport will reintroduce its dividend. So this is my dashboard. It's very simple. There is not much more to say about it. It's very easy to update, like the stock data is very easy to update from Yahoo Finance, dividend as well. So I feel like sometimes much more comfortable to take a look at this than by broker. And I think I will tweak it anyway somehow in the future, adding some extra elements, or like with 2021 coming, with 2021 being already here, I will have to also split some graphs between 2020 and 2021, or with the years in the future. So let me know if you like it. Let me know if you would like me to share this Excel sheet with you. And thanks all for today. That's all for today. And I'll see you guys in the next video.